What's up, everybody? Greetings, salutations to everybody. So, on today's video, I really want to cover up a serious topic. It's something that we all are actually going through at this particular moment in 2020. What I'm actually talking about is the recession that we are actually facing at this moment. So, on this video, I really want to cover up this whole topic of the recession, how the recession is affecting us, and how to actually take advantage of this opportunity. By the way, I'm not a financial advisor. Whatever I share in these videos are things that I have learned about. So I feel it's right that I actually share it to my audience. So you just want to stick around and make sure that you watch this whole video, because at the end of this video, coming to the end of this video, I'm going to show you what I'm doing to prepare myself for the recession and how I'm willing to take risk and take advantage of the recession. So just make sure you stick around until the end of this video, so you might also benefit in these bad times of the recession. So let's just get straight into today's video. Yes, so I'm sure most of you or some of you might remember the recession that happened, the market crash that happened in 2008. Some of you might be aware of it, some of you might not be aware. But if you don't remember it, just go back on Google it, and just watch some videos about the recession that happened in 2008. It's 2020. Now we're in a recession again. So a recession normally happens every 10 to 15 years. Every 10 to 15 years, we're likely to have a recession. This year, we had a recession due to the epidemic, the COVID-19. Nobody was expecting that. Yes, we are overdue for a recession, but nobody was expecting the COVID-19 to hit so badly as it did hit in this year. How do we actually profit from a recession? There are multiple ways to actually profit from a recession, which I'm still going to cover up later on in this video. As you know, in an economy, we normally look at the GDP. The GDP normally determines if the economy is doing well or the economy is doing bad. So if you study economics, then you will be at an advantage, because you will actually get to see these things happen. You will have ideas that, okay, now we're in a recession. Okay. GDP is gross domestic product. If a country's GDP actually goes down 6 months in a row, that means that country is in a recession. Many countries have been facing this, including my country, which I'm based in South Africa. So basically now we are in a recession. A whole lot of things are going to change, prices are going to change and stuff like that. The first thing you need to know, nobody can actually predict the market in the long run. Yes, you might say you can predict the market, what's going to happen tomorrow and stuff like that next week, but in the long run, nobody can predict what's going to happen in the market. So you need to be aware of that. And the second thing you need to know is that the market always bounce back. Fair enough, the market will crash, but the market will bounce back. How do we actually prepare for a recession? There are ways, there are multiple ways to actually prepare for a recession. There comes a time where the market, everybody's just spending cash like crazy. Everybody got money to spend. Like everybody's just feeling so generous. They're giving away money. Like they're just feeling like balling. I'm just gonna put it as that. Like they're just balling all out. That's the time for people with business mind, who are business minded, actually take advantage, actually like start from there. They save money. They stop spending money on dumb shit. I'm just going to put it up straight. They don't buy dumb shit. They only buy necessities, and they save a lot of money. So that's the time when you actually save a lot of money. If you are a person who's working your 9 to 5, that's a perfect time for you to actually start saving some money. Take some money, put it into a saving account. If not, get your money safe in a place whereby you know, even if something had to happen, your money is safe at all times. But just save some money and stop spending money on dumb things that you don't actually need, like material stuff. How do you actually profit from this? Profit from this. The way that we actually profit from this is you buy low and you sell high. I'm sure some of you are familiar with this term, buy low, sell high. When a recession hits, everything drops. You need to understand that everything is at a discount. Prices are at a discount. Real estate are at a discount. oil prices are at a discount, gold prices are at a discount. Sometimes commodities do go up because there's an imbalance in the market at sometimes, but a whole lot of stuffs do go down. For me, in my case, I look at it in a real estate perspective because I'm a big fan of real estate. I always look at real estate first because that actually tells me what's going on in the market. Because when it comes to real estate plays a very big part in the economy. Real estate, people own real estate. Some people buy real estate or homes on loan. So basically, they don't own the home, the bank owns their home. So once the recession hits, some people actually lose their jobs. And by this, what does it mean is that automatically they stop having a salary, they stop having money to spend on luxury things, they stop having money to actually pay for what they owe. So by this, the bank wants their money, but nobody's actually paying up now because why? People have lost their jobs, they have no salary coming in. So the bank is forced to what? Receive what they call is what? Like okay, to take back the property and actually sell it at a discount because why? Nobody, the owner of the house who bought it at a loan is no more paying. So now the bank is forced to take back the property. So once the bank takes back the property is back on the market at a discount price, or a real estate property is back on the market at a discount price. So what big investors do, they snatch at this opportunity, they take advantage of this opportunity. Some of us, a lot of us do not see this because why? We're not paying attention what's happening around in the market, which I think we should really start focusing on actually being aware what's happening in the market, especially in a recession time. So what happens after this? Investors grab a hold of these properties, they buy them at a very, very discount price, at a very low price, and then when the market bounce back, that's when they start making the ching ching, their money. So some people they buy it, they rent it out during the recession, and once the market actually bounces back and people actually start spending and the property gains value, and then they sell that property back into the market for a good large sum of profit. So why am I making an example of real estate? I am a big fan of real estate. I've been looking for I've been like investing in real estate for over a year now, but I would say it's not. I'm not investing in South African property at this moment. I was looking at the broad property, but I did invest a small change in some property companies that are in South Africa, which I'm just about to show you right now. So what I'm going to do, we're just going to jump into my screen. I'm just going to show you some charts. I'm just going to show you some property and the prices and stuff like that, how everything just happened. So what we're going to do right now is just jump onto my screen. Okay, so this is Easy Equities. It's the platform that I normally use to check up on property, on like whatever stocks or shares that I'm looking for to buy and stuff like that. This is an online platform broker. Easy Equities is based in Johannesburg in South Africa. It's a broker which I trust, which I normally use a lot of times to do my stock trading and buy shares and stuff like that. So I'm just going to show you a couple of examples of some stock of some shares that I bought recently, but it's quite a long time ago. So I bought into Growth Properties Limited. This was, I think, before the COVID-19 hit. So I bought into these companies because I thought they were good, but I didn't buy a lot because I was just still testing out and actually seeing what's going to happen and stuff like that. So I bought into Growth Properties Limited, and as you can see, like I have lost like 35.76% on my investment. Why? I bought early. That's a mistake that I made. I really bought early. So as you can see, like the market really just dropped on me. Like at this moment I'm sitting at a loss, but what I'm going to do, I'm going to hold because I know the market will eventually bounce back. So I'm just going to keep on holding. So this is one example of properties, how they drop. So if you are an investor or a person who's business minded and has knowledge on property, or basically on when a recession hits, how to take advantage, you are probably going to look to start buying somewhere around here at the bottom. Okay, and here's another example is I also bought into Redefine Properties. Redefine Properties also, same thing happened. COVID-19 hit, it crashed. I also looked into buying some insurance because I know insurance also does very well when people have money. They obviously pay the insurance company. They always paying. Basically, it's a month-to-month thing. So when the COVID hit, it actually also did drop down. But I just want to show you in details exactly on this platform here how the recession actually hit these property companies. So this is a platform that I normally use for analysis and stuff like that. It's trading view, so you can also go and check it out. It's very easy to use and view and stuff like that. So this year 2020, so this year 2020, as you can see over here, the market really started off good. Well, I wouldn't say it was good, but like there was a small hint that okay, the market is going down in South Africa. When when the COVID-19 was considered as an epidemic, it was somewhere in March when we actually went to on a lockdown, which is somewhere around over here. I think it was the 26th of March, if I'm not mistaken, but that was quite far away. But it was somewhere in March, so I would say it was somewhere around here, if I'm not mistaken. So as you can see over here, there was a big dip in the market, all the way down here. This was the bottom line of the whole market reset, of the whole drop of this property share. So it so happened that it dropped all the way down, and this was bad. Like this was terribly bad. So I'm sure this time we are still on lockdown, if not, but this was when the COVID-19 was regarded as an epidemic. So that's when people stopped buying stuff, people started losing their jobs, people stopped going to work because why, some people got sick, and things had to stop moving as it was moving at a normal pace. So as you can see, after this year, the market started picking up again. So as you can see, then the market started moving in a positive manner, which I wouldn't say at the moment the market has fully recovered, because at this moment the market hasn't fully recovered. But as you can see right over here, the market is showing that okay, now there's potential that the market might bounce back, but we are still in a recession at this moment. We are still waiting for good signs from the GDP. The GDP normally, it says everything. So once the GDP starts showing good signs, that means now we are eventually starting to go up and up and up. So that means if you bought into the market at this particular moment on this share, you're on your way to making some good cash. So this is just an example of how when the recession hits, how property goes down. I'm a fan of property, so I'm going to make an example of property. So like this is Easy Equities. So Easy Equities has also introduced a platform on property, especially just on property, which I was so excited when I actually got to see this. I was like, okay, this is exactly what I've been waiting for, because on this side, on this platform here, these were fairly enough shares and stuff like that, but I wanted to actually get into the real estate myself, like buying into real estate myself. So this actually gave me that opportunity to actually get into real estate and actually see the real estate and how much returns do I get, how long is the investment and stuff like that. So everything is in details. You can actually see what's happening on this platform right now. So what I'm going to do right now, I haven't like bought into any properties at this moment. I'm still looking into actually buying into properties, because this is the time to actually start buying into properties. I'm going to be putting my cash, like some cash that I saved up, into property. Whatever I make from my businesses, whatever I get to save on the sideline, I actually throw it into properties, because property is the best long-term investment in my opinion. You might have your own opinion, that's good. You might invest in whatever you want to invest, that's also good. But in my opinion, I love property. So with Easy Properties, like now you actually get to invest in properties. You actually get to invest your own amount and see the returns. For example, this property right here, uh, internal rate return, you're looking at a 10% return. Just look at this. These are good returns. For me, these are good returns. But like I said, at this moment, I was investing in abroad properties, which I'm also making some good returns out of. And when the time is right, I will share it with you. Yes, I will share it with you, but I don't feel this is a good time for me to actually share it with you at this moment, because sometimes I can share stuff and people have their own opinion and say stuff which, like, basically I don't care about people's opinion, because what I do, I learn about what I do my research, and then I go in, I mean all in. So to conclude this video, I just want to say that if you understand what happens in the market and you really want to profit from the market, please do save up cash, build your capital, and when the time is right, take full heed of the opportunities. At this moment, a lot of people are sitting on no jobs and have no capital coming in and have no money coming in. I do understand, but in future, you need to understand there will be another recession. And if you have experienced this recession, the epidemic, the COVID-19 epidemic, definitely the next recession, you will notice it when it hits, and you'll be like, shit, Ebrahim Mbokazi was right about this. So that's about it for today's video. I thought this was going to be short, but it just went long. But anyways, from me, please don't forget to hit that like and subscribe button on my channel, and make sure you smash that notification so you'll be notified every time when I do upload a new video. I really appreciate your support. It really takes time for me to actually do the research and actually get to understand what's going on with all these platforms and with the whole industry of investment. So I would appreciate if you actually do subscribe to my channel and do share this video if it brought any value to you and you feel it can bring more value to other people. So from me, I'd like to thank you, and I'm out.
Yes, sir, sit in, the man now sit in.